I think that that's just yet another piece of evidence that this is going to get worse before it gets better, which has been our long-standing view. That this is broader than just trade, right? That this is really about kind of who's going to be superior on the global economic stage. And I think President Trump is saying via various mechanisms that he wants the U.S. to maintain its global superiority.
And yet markets go up. And the headline is they're shrugging off trade fears. Markets go down, and they're global trade fears.
I still think that there is this view that this is kind of a part of the art of the deal for President Trump. That he doesn't really necessarily mean this. That this is just kind of a means to an end. Again, I think we would just underscore how sincere President Trump has been on trade for his entire public life. And especially with China. I mean, Bob Lighthizer, who's the U.S. trade representative, has been a China hawk for 30 years. And again, I don't think this is going to get better. We thought that, I think some folks were optimistic that we might see something by the G20 summit by the end of November. I think that's very optimistic. I think this is definitely going to slip into 2019, if not longer.
Burns, for the global markets, where are the trigger points for where this all might matter a little bit more? We were showing a chart of the U.S. dollar index. It's obviously a little bit back on the upswing right now. That's been a little bit of a stress point. So where would you look to say that all of a sudden maybe perception of the trade issue is worsening?
Well, it's something that really, I think that, it's just something that you almost have to watch it on a day-by-day basis. There's just been this ongoing tug of war, game of tug of war between, on one side, we've had very good economic fundamentals. We've had good earnings growth, good GDP growth. And on the other side, you've had geopolitical concerns, namely the China trade tensions. And so, on the days that the president doesn't, tweet himself in the foot with, talk about, increased tariffs, we've seen stocks continue to rally. And, the third quarter earnings growth is expected to come in a little bit less than what we had in the first and second quarters, but around 19%. And so to some degree, if you just let the markets do what they want to do and let them focus on the fundamentals, then stocks should continue to move slowly upward. Valuations are getting a little bit stretched, but at the same time, if we just simply grow with earnings, then that should drive markets over the next 12 months.
I mean, do you continue to see this dynamic playing out? China Shenzhen market down 7.5% over the last 3 months. The Dow is up 7%, almost a mirror image of each other.
It's definitely a case of the fact that whereas there's no absolute winners in trade wars, there can be relative winners. And it seems to be that what the market is saying is that whereas the U.S. may suffer, I think GDP growth could be hit by as much as 1% next year if we continue this tit for tat. But at the same time, that China's been suffering more. And as my counterpart noted, this could just be very well part of the art of the deal and the president just using negotiating tactics.